If you're trading covered calls, do you want to know which stocks you should trade and which ones you should avoid? In this video, that's what I'm going to share with you is the search criteria that you should check before even looking at the technical analysis. If you don't know me, I'm Sasha, the options coach, and I've been teaching people to trade options over the last 10 years. And in this video, as we dig deeper into the search criteria, I want to show you some insight because a lot of people, they go quickly to the charts and they don't really know exactly, hey, these stocks I should probably avoid regardless of the charts or the news or the hype. So anyways, let's get started. I just want to give you a quick little insight on this. And the reason for this is that when you go through this checklist, you're going to know, hey, this stock is tradable and this stock is not. Even if you've seen it in the news and you think it's popular, you think, hey, this is in the forums, this has got a good press release, it's got a good vision for the future, doesn't matter. If it's not liquid enough, if it's not tradable, then you should avoid it regardless. All right, let's take a look at some of these things. Now, the first one is kind of long-term sustainability. This is really all about, hey, has that stock been around for a while and will it be around for a while? The next one is going to be volume. I would say 1 million plus for the day. Now, you could go and bump that up to 2 million, but stocks that don't trade a lot of volume, like here I've sorted a list. And we can look at some of these that don't have a lot of volume, and I'll pull one up right here. This one is Arrow. This one's trading at about 24,000 shares in volume. It also doesn't have a lot of liquidity. It doesn't have a lot of options. It doesn't have a lot of weeklies, which goes into some of the next criteria. If it's under 20 bucks, probably also should avoid it. This is simply because, even though this one's 29 bucks, if you have a cheap stock, it's not going to have option premium. Kind of like this one, there's a lot of premium all over the place. But if you're looking at a scan and you see a stock like NESR, so here we go, NESR, you'll see it's $8.49. It doesn't even trade options. And you can pull up a bunch of these different stocks where they're cheap. ASUR. And this one's got options. It's under the $20 mark. But again, you've got not a lot of option premium. So that's why that criteria is in there. And that goes the same with trading weeklies. If it doesn't trade weeklies, you're not going to have a lot of flexibility. So going into this example, you can see this one doesn't trade weeklies. Whereas we compare something with, let's say, Disney, we've got weeklies. We've got these yellows in here, which means we can trade 8 days, 15 days, 22 days. It gives us a lot of variety. And if you pull up AROW, you can see no weeklies. So not tradable. I mean, can you trade these? Yeah, but the risk is just high, way higher. Good premium. Okay. So some of these, again, cheaper stocks, there's not a lot of premium involved in here. You know, they're all over the place. Prices are not really there. And that can be sometimes a problem. Variety with strikes. Same thing here. If you don't have a stock that's a little more expensive, what's happening is you're hopping on the strikes 25, 22 and a half, and 20, and then you're limited on the dates. You've got an issue and problem. Compare that to something like a Starbucks, where I could go into a 22 day and I have dollar width right here, dollar 95, 94, 93, 92. And there is a lot of strikes in there. So I could really play around with what zone I want to be in and fine tune those things. Okay, tight bid-ask spread is another one, which means in here, if we go in, it's tight. It's not too crazy or wild. It's not spread out like quite a bit. Whereas again, if you compare it with something like this Arrow, you've got 0 to 330. It's basically mispriced. Okay. Good implied volatility. This is so we don't have any crazy moves. This one is not too bad, but you do see a higher implied volatility with the shorter duration. But some of these, like DJT, you have an implied volatility of 218%. It's a little bit high and risky for most people, so be a little bit careful. Compare that to Walmart, a lot more stable. And then something in between, like let's say an AMD, you're at around 60%. Granted, this one's a little higher because we got earnings coming up. So that's another one there. And, then you can finally check if it's trending in the chart. And that is one thing to kind of keep an eye on. So let's say AMD, you can say, okay, well, is it trending or is it not? You can look at, let's say, NVIDIA. Is it trending or is it not? And that's what you can do as a final check. So this is some of the criteria. If you want this list or PDF, just let me know. Send me a quick note down below and I'll be happy to send it over to you with some other detailed descriptions on these things. This is just a quick checklist for the video. Other than that, thanks so much for joining me. Truly appreciate it. Hope you enjoyed this list and I will see you on the next one. Take care.